Hey everyone, in this video I'm going to tell you about how I bought Apple stock in 2010 and then sold everything a year later. So I make videos like this all the time about real estate, stock market, investing, everything personal finance you could think of. So if you like that sort of thing, subscribe to the channel and like the video. Now let's jump right into it. So in this video I'm going to tell you why I bought Apple stock and also why I sold it. In order to understand why I bought Apple stock, let's turn back the clock a little bit to when I was in middle school. It was 2005 and I was in my computers class and we had access to a Mac computer. It seemed apparent to me that Macs were so much cleaner, easier, better, faster than Microsoft products at that time, and I wanted a little piece of the action. Now I was a little bit of a nerdy kid, so I knew about the stock market and I loved that sort of thing, so I wanted to buy some stock in Apple. But seeing how I was 11 years old, I didn't exactly have a lot of money, so I couldn't buy any Apple stock at that time. But I was determined. So flash forward a couple years to 2010. I was 18 years old and I had managed to save up a couple $1,000s to finally purchase some Apple stock, something I've been wanting to do for many years. That year in 2010, I purchased Apple in two big tranches. One was in August, which I used Merrill Lynch to execute the trades because at the time they had no commissions on their stock trades, and you could see my stock transaction history here. And another was in December, where I used an actual broker, somebody I called to execute my trades, to buy another $2,400 of shares. In total, in 2010, I purchased $4,146 worth of Apple stock. Now, Apple had just run up 146% the year prior, but I didn't care because I knew that Apple was going to make a lot more money in the future. At least that's what I believed. So I trusted my conviction and I purchased Apple stock. But if I would have held on to that stock today, it would be worth almost $41,000. Honestly, it hurts to say that. So instead of making $36,628 in profit, I made a little over $3,800. That's nearly 10 times less than I could have made if I had just done nothing and held on to my stock. When I sold, I thought I was pretty smart because I had turned $4,100 into close to $8,000. Close to double my money in such a short period of time made me feel pretty good. But herein lies a mistake. I thought that Apple had run too much. I got too emotional. I thought there's no way that Apple could continue going up at the pace it has, and there's no way that people aren't going to start selling the stock because it's run up so much. But if I would have listened to that same sentiment back in 2010, I would have never purchased the stock in the first place because the year before, Apple had gone up 146%. So there was a problem. I got too emotional. I sold early instead of holding on. Now, the main reason I sold was because I had another investment opportunity available to me where I was going to be earning 10% interest on the money that I was loaning as part of a note. Now that seemed to be pretty good, and I thought to myself, 10% is going to be a lot better than anything Apple's going to do in the future, so I'm going to sell all my shares and I'm going to invest in that note. Now, I made some money on the note, of course, but if I would have held on to the shares of Apple, I would have made substantially more. So the key lesson is not to sell a good company's shares too early, to hold on for the long run, because those are the investors that do the best. Now compare this story to that of my brother, who I had recommended and helped him buy Apple stock at the same time that I did. Now my brother isn't somebody who deeply cares about the stock market and doesn't check it every single day, doesn't get too wrapped up in the news and what's happening and where stocks are going. He's just a person who puts his money to work and then forgets about it. Literally. I actually don't think he knows that he owns Apple stock to this day. But the point is he does, because he didn't get too emotional because he didn't make any moves at all. He actually benefited from Apple going up 10 times in value over that same time period. Even Warren Buffett knows that buying and holding is the best strategy for most investors out there. When he was a kid, he purchased City Services Preferred, $114 worth of shares. But if he were to hold on to that stock, he would have made way more money. And interestingly, if he would have taken that money and put it into an index fund, it would be worth over $600,000 today. The key lesson here, buy and hold and forget the noise. So for those who want to begin stock market investing, what would I recommend them doing? Well, first, I would open an account at a no commission brokerage. Commissions will eat away at your profits and you never want to pay them if you can help it. Next, I would invest primarily in a low-cost, broad-based index fund that mirrors the broader stock market, such as the S&P 500. Contribute to this early and often and never ever sell, and you will end up with a substantial amount of money if you hold on to it over the decades. Next, if you want to invest in individual stocks, I would keep it below 20% of the total amount of money that you're investing. Invest primarily in those index funds, but use 20% to have a little bit of fun and purchase stocks that you think can outperform, like I did with Apple. If you're picking individual companies, be sure to do your research and be sure to hold on for the long run, because you're going to have situations where companies are going to report bad earnings, there's going to be news flashing, there's going to be things that are going to entice you to want to sell your shares, but trust me, if you hold on to good companies for the long run, you're going to make a decent amount of money. And in fact, you can sometimes hit it out of the park like some people did with Apple. So the key lessons are invest early, invest often, don't pay commissions, and don't sell too early. Buy and hold for the long run, and you will make a lot of money. The stock market can be a great way to build wealth over time, but only if you're in it for the long haul. One last little thing that I'd mention, if you were to buy the iPhone 4 in 2010, at the time that I bought Apple stock, you would be paying around $599 for it. If you were to instead buy Apple stock, it would be worth over $6,000 or a 10 times return. That is the power of investing. What stocks are you guys looking at? What are your investment strategies? Do you think that buying and holding is always the best scenario? Well, let me know in the comments below. I really want to hear. And if this video helped you out, I'd really appreciate you giving it a like and subscribing to the channel. I'll see you next time. Thanks.